Oh, welcome into another daily editorial here on the KE Report, chatting with Jordan Roy-Byrne, founder and editor of the Daily Gold. Now, Jordan, let's talk a little bit about the last couple days of trading for the precious metals, gold and silver, right around Christmas Eve, and the day after Christmas, put in some very nice days. Gold was up a little over $10, I think, both days, and while it hasn't broken out to any highs for the year, it was an encouraging move off the back of really no significant news events that I saw that were a catalyst for this move. So clearly, just a lot of money watching and making their move kind of around Christmas. Let's get your thoughts, though, because there have been a lot of commentators out there saying, oh, there's a bullish flag forming for the gold chart. Do you subscribe to that thought?
As far as there being a bull flag in gold, we've had this correction. I personally don't think it's a bull flag. I mean, a bull flag, you tend to have a really tight consolidation, a really bullish consolidation. And so I'm not sure. I'm kind of nitpicking because if it's a bull flag, we would see gold really just continue to shoot higher in the next couple of weeks. It would shoot higher, go way above 1550. So that's possible. But even if it's not a bull flag, gold could still climb higher, but it would just do it in a more slower and steady basis. But Corey, I haven't been that focused on gold because, we were talking about this in recent weeks and in the last month. The GDX, its advanced decline line, it hit a 3-year high. It formed a really strong positive divergence. The mining stocks have been outperforming the metals so strongly that that's where most of my focus has been. And I just have to say, Corey, I mean, what a move we had this week. I mean, coming into this week, at least at the end of last week, we had this, it looked like a bearish reversal on Friday. And so I was telling subscribers, well, we failed to break above the December highs. It looks like we might correct here a little bit. And, we got the complete opposite where we have a super strong move for the 2 days to start the week. And I mean, those are perfect bullish candlesticks, really strong moves. There's no, I mean, they during the day, there was tons of buying. Both days, the market closed at the high, obliterated the previous December resistance. The miners are on their way to, SIL, SIL, the silver stocks ETF, that already made a new high. GDXJ is leading GDX, and GDX is trading right around 29. When that breaks above 31, that is going to kickstart a really big move higher in the sector with a lot of momentum behind it. So I know I got off track from your question about gold, but I would just, to the listeners out there, I would focus more on the shares because they're leading the metals. They're telling us that the metals are going higher. So therefore, I'm not paying that much attention to gold or silver. But I will say, we have this kind of move where the metals lag. Buying silver is always a good buy because we know that it's going to catch up eventually and soon enough.
Yeah, one other thing to consider is that silver actually has been doing quite well too. But yeah, finally seeing the shares leading the way. Can you also just outline why you find today's action encouraging? Out of the moves this week, it's one of the more muted moves, but you made the comment to me off mic that you really like what gold is doing today.
Okay, well, the reason I like it is if we look at GDX and GDXJ, they look to me like today they gapped up a little bit. I don't know if they've closed the gaps from the previous trading day, but we're at least at this point, we're not seeing a bearish reversal yet. And it looks like the market is just kind of trading around the close from yesterday. It's stable. It's holding the recent gains. So, I mean, it's possible that the miners, they could go a little bit lower and fill the gaps from before yesterday's trading, I should say. But even if that happens, I mean, it's still bullish here. So long story short, we've had a really strong move higher the past 3 days. And today, we saw a little bit of selling to begin, but we've seen buying come in, so it's stabilized. So I like that action. I mean, it's only 1 day, but we're digesting and holding the gain so far. I mean, if that continues for a couple more days, that's going to be bullish and just, give us a little platform to make another move higher, at the beginning of January.
So, Jordan, how much do you think that this move higher in gold has been supported by this falling U.S. dollar? The dollar's down quite significantly again today.
It's a good question as we're all trying to figure out what to attribute this recent strength to. And I'm looking at gold against foreign currencies, and that also exploded higher in the last couple of days. So that's good to see. But Corey, when you look at the dollar, it really, um, looking at it the last couple of days, it was oversold. It rallied up. It kind of, it's failed around 97.25. It failed right around its 20 and 50-day moving average. So the dollar chart is looking ominous. But the thing is, gold and the gold stocks, they're not waiting for the dollar to go that much lower. They're already ahead of the dollar. And so if they're saying, maybe they're saying the dollar's going to go a lot lower, maybe they're saying the Fed's going to have to cut next year, or maybe they're saying inflation's taking off. I don't know which one it is exactly, Corey, but the bottom line, and we talked about this a couple weeks ago, is basically any reasonable macro development as far as 2020, they're all bullish for precious metals and the gold stocks. And that's why we see the gold stocks performing so well, because they're discounting this in advance. And, we don't always know the reason. Sometimes it's months after the fact that we figure out why the market was moving higher, but that's how markets work. They're a discounting mechanism. They tend to anticipate things in advance. And they, as you said, they could be anticipating the dollar kind of moving into a bear market here. I mean, we talked about the technicals 1 or 2 weeks ago, and they're not good. And so, that's definitely positive for precious metals. I mean, it's positive for commodities. We also talked about that, and maybe it's also positive for global assets and stocks too. I know we might talk about that.
Well, that brings us into the next conversation where, yes, we are in that environment where U.S. markets, international markets are also moving higher. So it's this risk on, risk off, all moving higher. Do you think gold is maybe predicting a bit of a pullback or more significant move down in markets, broad equity markets? Or do you also think that gold is just finally benefiting from all this money that has been created over the last about 3 to 4 months?
It's a very good question, Corey, and that's why I would urge listeners continue to look at the ratios. How is GDX performing relative to the stock market? How's gold performing relative to the stock market? I prefer looking at GDX to the S&P because, as we just said, GDX and the miners, they're leading the metals. So focus on that GDX to the S&P ratio. I'm not sure to answer your question. I mean, we'll know in enough time, but the market we're in, it kind of reminds me of the mid 1980s, where basically everything went higher and the dollar had this massive move lower. But the dollar has not had a massive move lower yet. So I think it's going to move lower. I don't know if it's going to move lower massively, but the fact that we see precious metals rising alongside the stock market, the only time that really happened was in the mid 80s, and that's when we kind of had obviously a mini boom and a blow off, and we could be going to that point. But the other time, from a bird's eye view, I think we're kind of similar to the 1960s. That was a point when inflation started picking up, the secular trend started rising, bond yields started bottoming out. The stock market was in a bull market, but basically extremely overvalued from looking at CAPE and other long-term valuation metrics. So the early, mid, late 1960s, the early to mid 1960s, that's when we saw those things happen. That's when we saw gold stocks begin what was a 20-year bull market. So at the beginning of that, they started to rise alongside the stock market. They really took off when they broke out relative to the S&P. So that's why I'm saying focus on the gold stocks against the stock market. That's an important ratio. Overall, Corey, I'm not a huge fan of, I don't like to see precious metals doing well alongside the stock market. But look, beggars can't be choosers. We had a really long bear market, and I think we just have to take the gains as they come. I mean, eventually, at some point in the years ahead, we will see precious metals perform really well in the stock market, not perform as well. But for 2020, it looks like both are going to continue to perform well.
All right, we're going to wrap it up there, but interesting comments, Jordan. And the fact of the matter is, we have seen stocks and safer assets move up in tandem this year. It looks like it's setting up for a very good 2020, but hey, we'll need to see how the precious metals. We'll need to see how the precious metals start the year and hopefully build off this so far encouraging end to the year. Jordan, great chatting with you. Thanks for all your time, and I hope you have a very happy new year.